5 machines. That is what China built. And on that number, the entire global chip complex had the worst day it has had since March. Korea's stock market fell more than 10% and had to stop trading. Samsung had its worst day since 2008. So here is the question this whole video answers. 5 machines against a company that ships 131 a year. Did anybody actually check the math before they sold? Let's set the scene. Monday, a report lands. A state-backed company in Shanghai has started mass-producing its own immersion deep ultraviolet lithography machines. If that sentence means nothing to you, hold on, because I am going to make it mean something in about 30 seconds. The reaction was instant. ASML, the Dutch company that makes these machines, fell more than 7%. Its worst day since June. AMD dropped 8, Micron 6, Nvidia about 5. And by the time Asia opened, it had turned into something much uglier. Korea's index closed down 10.84%, a market-wide circuit breaker, the 8th of the year. Samsung fell 14.4%, its worst single day since October 2008. SK Hynix 14.7, and out of 917 shares on that market, 36 went up. Okay, the 30-second version of what these things are, because you need it. To make a computer chip, you print circuit patterns onto silicon using light. The finer the light, the smaller the transistors, the better the chip. Lithography machines are what do that printing. There are 2 tiers. Extreme ultraviolet is the bleeding edge. Deep ultraviolet is 1 tier below it, older, but still what most of the world's chips are actually made on. One Dutch company, ASML, makes essentially all of them. For years, the entire Western strategy for slowing China down rested on a single idea. Do not sell them the machine. So when China says it built the machine, you can see why people panicked. Except, go read the actual number in that report. The one almost nobody quoted. 5. That is China's target for this year, about 20 for next year. And ASML shipped roughly 131 of these things in 2025 alone, on a 98.7% market share. 5 against 131. And it gets less scary. That Chinese machine still relies on Japanese components. It still lags ASML on performance. It still has to be tested. This is not a company taking market share. This is a country proving a thing can exist. So no, ASML's revenue for next year did not change on Monday. Not by $1. So why did a market wipe out that much value on a number that changes nothing this year? Because markets do not reprice cash flow first. They reprice certainty. And on Monday, one specific sentence stopped being true. There is no alternative supplier. Not in volume. In existence. And existence is the thing that a terminal multiple, the value of all the years way out at the end, quietly rests on. Every model that assumed a permanent monopoly just became a model that assumes a monopoly with an expiry date. Nobody knows the date. That is exactly the problem. And here's the part that got almost no coverage, and it is the part that actually matters. In the same week China demonstrated the tool, it funded the customer. A memory chip maker called CXMT went public in Shanghai and closed its first day up 466%. It raised about $8.6 billion, the largest mainland semiconductor offering ever, and the second largest mainland listing of any kind since 2010. Its market value, roughly $488 billion, now makes it the most valuable company listed onshore in China. Bigger than the country's largest bank. And it holds about 7.5% of the world's memory chip market. So inside 7 days, the same industry got a domestic tool supply and a public balance sheet. That is not a sentiment story. That is capital formation. Which brings us to the read. The export controls did not stop the machine. They created the entire business case for building it. You cannot buy it, so you must build it, and now building it is a national priority with public markets behind it. Controls converted a buying problem into a building program, and this week that building program got a balance sheet. Now the honest risk, because I am not here to sell you the comfortable version either. A proof of existence has a habit of becoming a proof of scale much faster than incumbents expect. 5 tools this year, 20 next year, and if yields hold, that curve does not stay flat. So if you are sitting here thinking the sell-off was simply wrong, be careful. The reaction looks badly oversized against the next 2 years of actual revenue. And the long-run monopoly premium genuinely does deserve to come down. Both of those are true at once. Most of the takes today picked one and shouted it. So here is what we are actually watching, and the call we will be graded on. We think China ships fewer than 20 qualified immersion tools into real volume production by the end of 2027. And we think ASML does not cut its 2026 guidance because of Chinese lithography competition. If either of those turns out wrong, we were wrong, publicly, and you can hold us to it. And the one signal that decides it is not another headline. It is yield. Reported mass production is not the same thing as machines that actually print good chips at competitive throughput. That is the falsifiable core of this entire story, and it is the only number that matters from here. So which is it? Did the moat break this week, or did it just get a deadline that everybody can finally see? Tell me what you think below. And if you want the rest of today's market, the full daily brief is linked. I'm Frankie. The asymmetric signal. One contrarian read a day. Subscribe. Research and education only, never investment advice.